Thank you for standing by. Welcome to the call to discuss onsemi's acquisition of Synaptics. At this time, all participants are in a listen-only mode. After the presentation, there will be a question-and-answer session. To ask a question, you will need to press star 11 on your telephone. You will then hear a message advising your hand is raised. To withdraw the question, please press star 11 again. Now it's my pleasure to hand the conference over to the Vice President of Corporate Development and Investor Relations, Parag Agarwal. Please proceed.
Thank you, Carmen. Good afternoon, and thank you for joining us today to discuss onsemi's acquisition of Synaptics. I am joined today by Hassan El-Khoury, President and CEO of onsemi, Thad Trent, CEO of onsemi, and Rahul Patel, President and CEO of Synaptics. This call is being webcast on the Investor Relations section of our website at www.onsemi.com. A replay of this webcast, along with the accompanying slides referenced in the call, will be available on our website approximately 1 hour following this conference call, and a recorded webcast will be available for approximately 30 days following this conference call. Additional information is posted on the Investor Relations section of our website. During the course of this conference call, we will make projections or other forward-looking statements regarding future events or the future financial performance of the company. We wish to caution that such statements are subject to risks and uncertainties that could cause actual results or events to differ materially from projections. Important factors that can affect our business, including factors that could cause actual results to differ materially from our forward-looking statements, are described in our most recent Form 10-K, Form 10-Qs, and other filings with the Securities and Exchange Commission. Our estimate or other forward-looking statements might change, and the company assumes no obligation to update forward-looking statements to reflect actual results, change assumptions, or other events that may occur, except as required by law. The purpose of this call is to discuss onsemi's acquisition of Synaptics. We request that you focus your questions on the transaction, and we will not be able to answer questions on current business conditions or other topics. During this conference call, the speakers will refer to the presentation related to this transaction, which is posted on onsemi's Investor Relations website. Now, let me turn it over to Hassan. Hassan?
Thank you, Parag. Good afternoon, everyone, and thank you for joining us. Today, we are excited to announce our proposed acquisition of Synaptics. This marks the next chapter in our journey as we position ourselves to become a leading provider of intelligent systems. I'll walk you through the strategic rationale and why this is the right time for us to go down this path. Moving to slide 4. This combination starts with a shared mission of intelligent technologies for power and sensing for onsemi and connected devices for Synaptics. It will enable us to deliver intelligent systems to support AI applications from the data center to physical AI and provide us with the 4 key pillars needed to win. Those are power, sense, and control coming from onsemi and the connected compute from Synaptics, and together we would become a leading provider of intelligent systems, expanding our total addressable market while enabling us to capture more content value per platform. Turning to slide 5. The technologies this combination brings together will expand our AI capabilities from AI data centers into physical AI. We anticipate it will expand our total addressable market by $30 billion to $243 billion by 2030, as we are positioned to enable AI from infrastructure all the way to the edge and to increase the value we can deliver to our customers and our shareholders. We're integrating a differentiated edge AI compute franchise with a strong portfolio of human-machine interface and wireless connectivity solutions. And together with our differentiated power portfolio spanning from silicon to wide bandgap, our image sensors, and our Treo portfolio of products, we would become an industry leader positioned at the intersection of power, sense, connected compute, and control, addressing the four pillars of physical AI. We expect the transaction to be accretive within 18 months from close, strengthening our long-term financial model. On slide 6, you'll see our business is already well-positioned across AI infrastructure ecosystem, where we are a leader in energy storage systems and AI data centers from the grid to the core, and many of our products are also used across various edge AI applications today. With Synaptics portfolio, we will be able to extend our reach and content opportunity across physical AI applications like robotics and humanoids. As a result, we believe we will address an AI TAM of $100 billion by 2030, growing at a CAGR of 25% over that period. Now, let me hand over the call to Rahul, the architect behind Synaptics' transformation. Rahul?
Thank you, Hassan. It's a pleasure to join you on today's call. We are excited about this transaction, and I share your vision of building intelligent systems and scalable platforms for customers. First, I'd like to sincerely thank my entire One Synaptics team for their dedication and execution in reaching this important milestone. Let me briefly introduce Synaptics and the platform that we have built. Throughout our 40-year history, Synaptics has consistently anticipated major technology shifts and captured emerging market opportunities through innovation. Today, we offer a broad portfolio of edge compute, connectivity, interface, and sensing solutions. Over the past several years, we have focused on AI-native compute and connectivity while extending our leadership in human-machine interfaces into new physical AI applications. As intelligence moves from the data center to the physical world, the convergence of these technologies is becoming increasingly important, and we have built strong and strategic relationships with companies leading AI at the edge. Slide 8. At the center of our strategy is the Astra platform. We have developed AI-native microprocessors and microcontrollers that integrate multiple compute engines, including a neural processing unit, Google's Coral NPU, GPU, general-purpose CPU, and multimedia processors within a monolithic SoC. We have architected the platform for performance, power efficiency, and scalability with an open source and developer-friendly software framework and tools that simplify deployment of AI models across a broad range of applications. Since joining Synaptics, I have focused the company on delivering solutions that accelerate customer innovation and time to market. Through this combination with onsemi, we are advancing a shared vision. I would say a vision that I believe is shared between Hassan and I of bringing intelligent AI systems to a broad range of markets, particularly industrial and physical AI. Additionally, onsemi's established sales organization and global distribution network will accelerate the adoption of our solutions and expand our reach. The One Synaptics leadership team is excited to work with Hassan and onsemi team to realize the full potential of the combined company. I'd like to turn it back to Hassan.
Thank you, Rahul. You can see why we're excited about this combination and the capabilities it would bring to onsemi, and how, with Synaptics, we will be positioned at the intersection of the four pillars of physical AI. We have a long history of supporting leading customers across auto, industrial, and AI data centers, giving us the right foundation to expand into the world of physical AI. With Synaptics, we expect to provide all the key building blocks required for machines to sense, decide, act, and adapt to the physical world. The transaction would create a category-defining leader in intelligent systems, an enabler of the physical AI world, while expanding our automotive and industrial pedigree, which are already in the physical AI realm. Together with Synaptics' strength in human-machine interface, wireless connectivity solutions, and connected compute, we can accelerate our strategy and expand our reach to a wide range of established and emerging markets such as autonomous vehicles, robotics, and AR/VR. As these markets ramp, we will continue to be at the center of it. We're already designed into many robotics platforms via our motor drivers, power converters for motors, our position sensors, and our power devices, and this acquisition would extend those capabilities. Moving to slide 10. The complementary portfolios enable us to unlock and drive significant value creation opportunities and deepen customer engagements. And more importantly, beyond the technology and capabilities, this combination will bring in a world-class team that has made substantial R&D investments to establish this platform, which would help us accelerate innovation and unlock new markets as a combined company. Our onsemi global sales network can help accelerate the go-to-market for our combined business, and we have a history of moving products quickly into new markets. Also, the onsemi executive team, myself included, have first-hand experience in managing and scaling businesses from connected compute to HMI. Now let me turn the call over to Thad to cover the financial aspects of the transaction. Thad?
Thanks, Hassan. I'm now on slide 11. This transaction is compelling from both financial and strategic perspectives. It provides us with a market-leading technology portfolio that enables us to deliver intelligent systems to support AI applications from the data center to physical AI. From a financial perspective, we believe this combination has significant value creation opportunities to drive revenue and earnings growth with a very attractive margin profile. The combined pro forma company would be $7.8 billion in revenue in 2026 based on street estimates. The pro forma company on the right side of this chart includes our expected $200 million of annual run rate synergies and includes stock-based compensation for Synaptics consistent with onsemi's non-GAAP reporting. The combined scale strengthens the financial profile with attractive gross margins and accelerates our path to our long-term model. We expect non-GAAP EPS accretion 18 months after close. Turning to slide 12, let me provide a brief summary of the transaction details. The acquisition is an all-stock transaction. Synaptics shareholders will receive 1.35 onsemi shares per Synaptics share, implying a total enterprise value of approximately $7 billion. Our offer represents an approximately 19% premium to the volume-weighted average closing prices of onsemi and Synaptics over the last 10 trading days. Pro forma ownership will be 88% onsemi and 12% Synaptics. The acquisition is expected to be accretive within 18 months of closing with $200 million of synergies. Turning to the balance sheet, we maintain flexibility with pro forma net debt of $1.2 billion as of today and net leverage well below 1. With this flexibility, we remain committed to our existing capital return policy, returning 100% of our free cash flow to shareholders through our share repurchase program between now and close. We anticipate closing the acquisition in mid-2027, and the transaction is subject to Synaptics shareholders' approval, regulatory approvals, and other customary closing conditions. Also, as highlighted in today's press release, both companies are reiterating previously provided financial guidance for the current quarter. To wrap up, this combination would expand our total addressable market and our solutions to enable AI from infrastructure all the way to the edge increasing the value we can deliver to our customers and our shareholders. With that, I'll turn the call back over to Carmen to open up the call for questions.
Reminder, to ask a question, press star 11 on your telephone and wait for your name to be announced. To remove yourself, press star 11 again. One moment for our first question, please. It comes from the line of Ross Seymour with Deutsche Bank. Please proceed.
Hi, guys. Thanks for letting me ask a question, and congratulations on the deal. I wanted to see what your thoughts were on revenue synergies. I can see how this diversifies the end markets for both companies, and I can see how the scale of ON could be beneficial to Synaptics. But I wondered how you thought about any revenue synergies where the actual combined company can grow faster than the two individual companies could.
Yeah, Ross, this is Hassan. Clearly, as you can imagine, there is going to be revenue synergies. If we look at about intelligent systems as we define it, we have our core markets, Synaptics has their core markets, and there's not a lot of overlap between them. So to simplify the outlook of the way we look at it, the systems we are in, where we have power, sensing, both on the power conversion and control, there's always a compute, connected or not, at the center of it. In the systems that Synaptics is very strong in, where they have the architectural control from the compute side, there are always parts that we are able to deliver around those same systems. So with that small overlap, if any, and the complementary nature of both the portfolio and the markets and the customers, the net benefit for the combined company is the revenue synergies, and that's what we're looking at. On top of that, of course, we talk about the expanding TAM that both Thad and I talked about. So you put all of these together, and then you can see the excitement that we have with the combined company as we go to market together.
Thank you for that. And I guess as a quick follow-up, the $200 million in synergies, any color, is that anything in the COGS line, or is that all on OpEx? And then the regulatory approval, anything unique in that? Do you need China?
On the $200 million of synergies, most of that is on the OpEx line. You can think about it as probably 85 to 90% on the OpEx line, and the remainder being in the COGS line. We think most of that will come out of SG&A, and I just want to also point out that also includes the stock-based compensation. So when you think about your models, you need to adjust the Synaptics historical reporting to include stock-based compensation.
From the regulatory, it's customary regulatory based on on the work that we've done. Obviously, we have to continue to do the work. We do expect China regulatory, but other than that, it's very customary. And of course, we're comfortable given the complementary nature of our portfolio, as I described before, and really the benefit that all that brings to customers worldwide.
Thank you.
One moment for our next question. It comes from Vivek Arya with Bank of America Securities. Please proceed.
Thanks for taking my question. Hassan, as of your last earnings call, the assumption was that ON's preferred area of expansion is, the cloud data center and power rather than consumer and edge. So I'm curious, what tipped you in this direction of doing more in kind of consumer and edge as opposed to doing more in the AI data center? I realize it's not, either or, but I imagine there is still a level of opportunity cost to expanding in this direction as opposed to re-emphasizing the AI data center more. So just curious to hear what kind of tipped you in this direction.
Sure. So, as you know, that doesn't change our direction at all. That's what I mentioned by the complementary nature and really the expanded nature of that combination. We have already established a very strong foundation in the AI call it the AI data center and the AI infrastructure, what we call the AI halo. We have a leadership position in industrial that is benefiting from AI data center. We have all of the technologies that are required and that are needed, and we are winning and have a strong growth in these markets. Of course, as the market for SSDs, as you know, develops, we are already present and have the technology for those. Going into the AI data center, we've talked about our revenue position last year and what we expect this year. We've done some of the acquisitions for capabilities already. So not to say that we have a very strong foundation already that we have built over the last few years for, call it the AI data center and AI infrastructure. What this combination adds is a more strategic and forward-looking. You can think about it as we're skating where the puck is going to be while continuing to build upon the foundation that we've done so far, and we have been very successful. So it is not one or the other. It is continue to do what we're really good at and we have built while we think about how to expand, because the natural extension of AI out of the data center is into the physical realm, which is physical AI. We see it in automotive. We see it in humanoid. Both of these markets we play in. We see it in, of course, robotics as an overall market, which includes humanoid, and we see it in industrial. So getting that complementarity with the connected compute is strengthened the whole portfolio beyond just where we're strong at and what we've built for the last 3 years.
Got it. And for my follow-up, what do you see as the structural growth rate of Synaptics for the next few years? Because when I look at consensus right now, it's showing a 9 to 11% kind of growth rate from 26 to 28. I appreciate that parts of the business are growing faster, but regardless, as an enterprise, people see their growth rate at 9 to 11%, which is a little bit lower than ON's expected growth rate. So what do you think the market is missing in projecting Synaptics' growth rate that ON can perhaps add to in terms of revenue synergies? Thank you.
Yeah, so I'm going to give you the opportunity that we see as a combined company. Of course, there are two parts for Synaptics. You have the Astra that Rahul talked about. That is growing actually much faster. You can think about, I think, from the consensus, 25%. That small portion of the revenue today, but that is the high growth that is at the center of what I talk about intelligent systems. That's going to accelerate the growth of both the combined company, and really it's a higher growth for Synaptics proper as well. Now, I think what there is a untapped missing concept of technology is, I think from the human machine interface side of it, what is new and emerging is the applicability of human machine interface beyond just, what we all know, including me, the touch interfaces or the touchscreen or capacitive touchscreen into the sensing for humanoids and robotics in general. That is a forward-looking growth that we together, because we are strong in those markets as well, we can take that part of our sensing portfolio. We already do position sensing with inductive. This brings the tactile sensing. That, I believe, is an untapped opportunity that the technology exists. Synaptics have been investing in it, and the go-to-market of the combined company will help accelerate that.
Thank you.
Thank you. One moment for our next question, please. It comes from the line of Quinn Bolton with Needham & Company. Please proceed.
Hey guys, I'll offer my congratulations on the acquisition as well. Hassan, maybe just wanted to get your thoughts on any potential manufacturing synergies. I know the COGS synergies are only 10 to 15%, but longer term, is there any opportunity to insource any of the Synaptics product portfolio to your fabs or back end that might give you longer term COGS benefits? And then I've got a follow-up.
Sure. Obviously, we'll have a lot more once we start doing the integration planning and do a lot of that detailed work. But at a high level, I can tell you from the Astra or the advanced nodes, anything below the 65 nanometer, we don't expect that, given just where our manufacturing footprint. However, from the prior answer that I gave Vivek on the human machine interface, and as we push towards that roadmap, there's definitely potential there that we have to look at. It is very synergistic with the capabilities that we have built, part of our Treo platform or BCD 65 that we run in East Fishkill. So, of course, that will be a favorable gross margin that brings it in. And I just want to highlight that is not at an expense of capacity that will be taken away from Treo. It's actually, again, complementary to what we do. We already do the sensing with Treo, and this adds that synergistic capabilities that we can bring in. So some of the business, yes. The other, we don't plan on that.
Perfect. And then maybe for Rahul, just any thoughts? Can you give us some sense of the design win pipeline that you have for Astra and your tactile sensing in humanoid or other sort of physical AI applications? And maybe for everybody on the line, do you have a sense what your dollar content could be as a combined company, say now in a humanoid, as you bring the two companies together? Thank you.
Well, Quinn, on the design pipeline, I think we haven't broken out the design pipeline. At some point, we will start sharing what our total design pipeline is. But let me go back to first Astra. Astra absolutely is seeing momentum build up better than what we had anticipated for the year FY26. Our fiscal year ends in June. So we had anticipated a certain pipeline, and we are ahead of that plan. On humanoids and robotics, from tactile sensing point of view, at last conference call that we had in May, I had indicated we have 35 engagements, 35 unique company engagements, multiple SKUs within these companies that we are engaged on, and that number has gone up even more since then. And I'll be more than happy to share with you the next level of detail at the next conference call or the next opportunity comes about. But the growth in that design pipeline has been just phenomenal in terms of where we thought it would be versus where it is right now. And I go back to what Hassan is saying. I think the amount of momentum that we are seeing in physical AI, and as a result, the new importance that is being put on the function of tactile sensing in these humanoids as they come to become not only contextually aware, but human aware and interactive to humans and machines on a forward-looking basis. The tactile sensing component has seen a lot more traction. I had indicated on the last call that we have a major hyperscaler out of San Francisco engaging with us, along with another big company where we are already shipping, and they have announced shipments of humanoid. And so, there are inbounds coming into us where before our sales guys get a chance to react to, some of these opportunities. And so, really excited about what the opportunity is for the combined company in the realm of physical AI. In terms of dollar content, just for Synaptics, I had indicated on the last call, it's a few tens of dollars. You can model anywhere from $30 to $60 range for us. And so, what comes together with ON is, a much higher number in these platforms. So now again, they vary by the platform.
And we'll be obviously disclosing more on the content as we explore and expand our strategic intent here. But that goes back to, what Rahul mentioned, the untapped potential for what is considered today as purely HMI, and how we look at it, part of this combination, as enhancing the sensing portfolio that we bring into the market. And together, we will have a lot more modalities that we can address.
Perfect. Thank you.
Thank you. One moment for our next question. That comes from the line of Joe Quattrocchi with Wells Fargo. Please proceed.
Yeah, thanks for taking the question. Maybe first I was curious if you could talk about, how do you think about just the potential integration of some of Synaptics technology around connectivity and wireless for the Treo platform?
I think you can't think about it as a combination for the Treo platform. It is complementary to what we do, because the connected compute that Synaptics does is a much different node, and it really is a much different application. How you can think about it is Synaptics' compute or connected compute at the center of an intelligent system, and multiple Treo around it controlling the loads, whether it's a driver to our silicon carbide or driver to our JFET, and connected to wirelessly, or connected through 10BASE-T1S Ethernet, which also is on Trail. So I just explained to you what a intelligent system in the physical AI realm would look like, and how each one of the companies and the technologies each bring into this combination will play a complementary role in achieving what the system's supposed to achieve. So we do a lot of wireless. We're leaders in the in the wired connectivity. Leadership comes from Synaptics on the compute and wireless compute, and together we are basically a leading force in the physical AI when it comes to intelligent systems.
Thanks for that. And then as a follow-up, is there any way you can comment, was this a competitive bidding process?
Obviously, the nature of the combination, given the two public companies, you'll just stay tuned. We'll be filing all of the appropriate filings when the time comes. So I'll leave that answer to you when the filing goes publicly.
Fair enough. Thank you.
Thank you. Our next question comes from Joshua Buchalter with TD Cowen. Please proceed.
Hey guys, thank you for taking my question. I guess I was hoping to understand a little better, like, how does this change your portfolio from a competitive standpoint? In particular, On Semi obviously has a rich legacy in power and analog, and you're adding the assets from Synaptics, which will have the edge AI processors. But do you feel like you're inhibited by the lack of a general purpose microcontroller business, or can you speak maybe more broadly to what you'll be able to offer from a processing standpoint for some of these edge AI applications? Thank you.
Yeah, so I think obviously with every system we target, I wouldn't say we've been inhibited, because this is the complementary nature of the combined companies expands the market. We've always been very consistent that our outlook and our strategy and our financial model is organic and independent of outside acceleration. We have been introducing our own compute, different level than what Synaptics brings. So what Synaptics really brings is a acceleration and a faster time to market with a much larger TAM that we talked about. So it's really a additive, if you will, not a plugging a hole that we have. And that's why the market expanded with the top line outlook expansion that they bring, plus of course the potential for revenue synergies that I mentioned to us earlier. So I don't look at it as lacking. I look at it as additive, and a very natural additive, because as we engage with these intelligent systems with our customers, there is a compute at the center of it that we have been also very successful before this announcement. This adds that to the customer, where customers now gets you can call it a synergistic system level that works very well together. Yeah, go ahead.
If I may add, I think to what Hassan just shared, just to be very specific, the Synaptics processing platforms include both microprocessors and microcontrollers. And they both are multi-compute fabric implementations. And, they scale from an architecture point of view, depending on the end application. So obviously, the portfolio today is at a certain level in terms of scale, and with the combination, it can broaden the scale very quickly because of the architecture choices we've made, not only in silicon, but also in the software strategy, which is largely open source, developer friendly, and can scale across a broader ecosystem.
And that's really the exciting part of adding that capability, the way Rahul just described it, with our global reach of sales, and how quickly we can scale that with the engine that we have built at onsemi.
Okay, thank you for all the color, both of you. And maybe for Thad, can you maybe walk through the rationale behind using stock instead of cash here? Thank you.
Yeah, Josh, if you look at the deal, right, it's a low premium deal, all stock. It gives us flexibility on the balance sheet. I mentioned that in my prepared remarks. So we have flexibility to continue to return capital to our shareholders through the repurchase. And I think that's the key, right? Versus using cash tends to be a higher premium. We've partnered with the Synaptics team, and we think there's a lot of value that we'll create for both shareholders here.
Thank you.
Thank you. Our next question comes from the line of Christopher Rowland with Susquehanna. Please proceed.
Hi, guys. Thanks for the question. Congrats on the deal. I am calling it Cypress 2.0. And with that, maybe you could describe how the playbook, is it going to be exactly the same as Cypress, or do you see some differences here as to how you ran that business?
No, of course. It's a very different business. I've always held the no two companies are alike. In this case, no two combinations are alike. The technology and the platform, call it the Edge AI platform that Synaptics brings, is much further and above what Cypress had at the time, which was the microcontroller only or traditional microcontroller. So this is beyond what that capability is. That's point number one. Point number two is the opportunity for both the connected compute and the sensing that Synaptics has with the combination of what onsemi already has on the power, sense, and control. That is playing in a very different market than it was 7, 8 years ago with Cypress. So the market has grown tremendously. Physical AI was not a thing. AI data center was not a thing. Therefore, the content, and that's where the TAM is exciting for us. We're playing in a much bigger pie overall, and the coverage of the combined company is much bigger slices of that larger pie. And we intend to deliver the wins and the leadership as the combined company for that larger pie with differentiated technology, way more differentiated than what it was when I was running, in my past life. Familiarity, however, with that adds credibility. That's why for us, it's not a deviation. It's a continuation of what we are doing at onsemi. And of course, the executive team at onsemi in combination with the leadership at Synaptics is a natural technology and really market that we can target together. That's what makes this exciting and very natural combination.
Excellent. And perhaps a question for Raul. Hassan just mentioned the low premium. It's particularly even lower, perhaps, for an all-stock deal. So what was the thinking here? In terms of that, the ultimate deal price, but also for your future, standalone versus tied up. If you could maybe talk about that.
Yeah, Chris, I think, look, I definitely got a chance to kind of understand onsemi's strategy on a forward-looking basis. I'm truly excited about a couple of big things. First, their strategy in itself presenting an upside potential for the Synaptics shareholders from where they are headed on their roadmap and their plans independent of Synaptics. Number two, the combination with onsemi presents Synaptics scale. I go back to something I said earlier during the presentation, the like-mindedness of building solutions. It's not point product anymore, it's solutions all the way, taking the entire tech stack, including software capabilities, into account. And so you now have a formidable platform across multiple market segments. And the third big thing, again, going back to the revenue dimension, is the scale of global reach. I have discussed on behalf of Synaptics, at some point over the next 2 to 3 years, we may plan on getting our distribution set up. However, this happens on day one with the combination. And so with our developer-friendly open source platforms that are virally scaling through our partnership with Google and others, this distribution capability that onsemi brings to the partnership further accelerates our reach into the global markets, and especially in the markets that are industrial and physical AI. The combination with onsemi. So if you net it out, it was not a difficult decision in context of coming together with onsemi to go with the all-stock deal.
Great. Thanks and congrats, guys.
Thank you.
Thank you.
Thank you. Our next question is from the line of Tore Svanberg with Stifel. Please go ahead.
Yes, thank you. From Stifel. Congratulations on the deal. Hassan, my first question is on sort of the roadmap eventually. You think about the competency that you offer in power and sensors and combining that with compute and connectivity. Should we think of sort of the products to be discrete, or is there potential roadmap here where you could develop some SoCs that contain, all the IPs needed in physical AI?
Yeah, of course. Look, this is day one of announcement. Now the team is going to shift into, to the extent, of course, we are allowed as two separate companies post-announcement of what we would call integration planning, to understand more in depth about what day one, which is what we would call the closing day, would be. From a work that we've done, part of this process, we do see complementary technologies, whether we meet at the board in a system or whether we meet in a package, that's yet to be defined. That's not a one-size-fits-all. It depends on the technology and what is the best thing to do for the customer to get that value that the customer will get from a system level with the combined technologies we offer.
Very good. Thank you for that. And that's my follow-up. As you evaluated Synaptics, perhaps with other companies you may have looked at or other technologies, what were some of the things that were really unique? Was it the NPU? Was it the connectivity portfolio? I mean, I assume it's a little bit all of the above, right? But I'm sure you must have looked at other technologies as well. So just curious if there was any few things that really stood out for you.
Yeah, I would say, look, I mean, obviously we chose for us. Synaptics was the choice we've made for a lot of reasons. I'll do two of them. One is the strategic and the obvious reasons that we announced this deal and we announced this combination. And the strategic one is you can think about getting a microcontroller or traditional microcontroller with some peripherals and getting into AI is very different than starting with an AI native and then getting into the rest of the market. So when our intent is to complement our power and sensing in the physical AI, you need an AI first microprocessor, an AI first engine. That is what Synaptics has done. So we gravitated towards that from a strategic perspective. Of course, as we engage, we liked the rest of the portfolio. I talked about the HMI. I see it as HMI, of course, but I also see the untapped potential that I talked about in the tactile feedback or, in applications that are critical for the physical AI where tactile becomes a need of sensing. So that's more of, I would say, a positive surprise on top of the strategic intent. And of course, you add all of that with the synergies we announced and the deal being accretive. And of course, the combination where some of that business, while you invest in the forward-looking AI platforms that I discussed, the rest of the business brings in cash flow to invest in high growth. That's always what you want in a growth business, so it's not a drag on earnings. It's actually, you can think about it as self-funding. It's what we've done at onsemi. We've been really good at it. They have done very similar. And that together with our combination delivers a compelling financial profile for the combined company on top of the strategic profile that I described. So it basically clicked all of the boxes that we were looking at when we were looking for strategic partnership.
Makes a lot of sense. Thank you, Hassan.
Thank you. Our next question comes from Jim Schneider with Goldman Sachs. Please proceed.
Good afternoon. Thanks for taking my question. First question I wanted to ask is, in terms of the design wins and the market share position that Synaptics has with Astra in both humanoid and maybe industrial robots, how do you sort of frame roughly what you think your market share position is with the embedded processors in that submarket, realizing that it's growing very quickly? So you can either frame that in terms of today's wins or tomorrow's pipeline.
Well, I think, look, the marketplace for humanoids is still evolving. And so there is not a clear way to say what the design potentials are in terms of revenue over time. I will say this. We have a lot more HMI traction. We also have something that we didn't talk thus far on this call is interface technology as well. And so the combination of tactile sensing and interface is already in multiple platforms out there. We are shipping silicon already. There is one that is a North American franchise that's been publicly talked about, and the company has already indicated that they're going to have pilot humanoids by the end of this year and about 1 million unit run rate on humanoids by the end of 27. And, we are in there, right? And so without going into names, because it would be prohibitive to do so at this early juncture, I would go back to, the 35 designs that I had announced during the last earnings call in May. And, since then we have graduated to a newer level, which I will definitely at some point disclose. And so really excited about overall, content dollars that we are seeing from our product portfolio, along with in many situations gaining traction with Astra as we pull in, along with tactile sensing. I go back to what, Hassan initially touched on as well. With multiple sensing capabilities now in a combined portfolio, tactile, we didn't talk about, but ISP capabilities, image sensor capabilities, audio capabilities from Synaptics, wireless sensing capabilities from Synaptics. The AI native processor capability becomes a very natural hub for supporting multimodal AI inference capability right there in the functional, section of the humanoid, right? And so you can see, again, I indicated earlier, very like-mindedness between Hassan and I as systems first, system solution first. This effectively builds that platform equation, not only in humanoids, but many other industrial applications that would be in the realm of physical AI on a go-forward basis. So really excited as this market evolves, the potential and the like-mindedness of bringing system solutions, brings the benefit for the combination.
Yeah, and that's really what gets us very excited about this combination because, you talked about share and market and so on. None of that is possible without a strong technology foundation that Rahul described, point number one. And point number two is it all starts with winning with the winners and going broad as fast as you can. They've done a great job with that. We would help with the combined company, with our sales and distribution network. And those are the foundation for a leadership position as a combined company that benefits the customers. So that's what gets us excited about this combination.
Thanks. And just as a quick follow-up, can you talk about, if you think about Synaptics customer base, roughly how many of those customers would you say are on customers as well today?
So that's a hard one to say of how many, because you have to imagine we have tens of thousands of customers. But I would say there's a complementary and there's some overlap. Obviously, we are leaders in auto and industrial. A lot of the Synaptics has some auto and industrial, in addition to consumer and the edge AI customers that Rahul discussed. And together, there's not a lot of overlap, but more of an expansion of a customer base. And this is where I answered the potential for revenue synergies, where we would be able to support their existing customers with our portfolio and vice versa. That, I guess, the minimum overlap is what makes this also exciting and beneficial for the combined customer list that we would have together.
Thank you.
Thank you. One moment for our next question. It comes from the line of Harlan Sur with JP Morgan. Please proceed.
Hey, good afternoon, and congratulations on the acquisition. Synaptics team has been gaining pretty solid traction, right, with the Astra AI processor and MCU platform. As you mentioned, strong growth profile. I know the Synaptics team was also focused themselves on driving higher analog, mixed signal, power, sensing content attached to deliver more systems-level solutions, right? But it seems like this is where the onsemi team can really fill almost the entire system/board level BOM with its broad portfolio of power management, trail mixed signal, and intelligent sensing portfolio. So if you look at the Astra compute reference design and platforms across different applications, like what percentage of the entire systems BOM outside of the processor can the onsemi team address? Is it 50%, 60%, 70%, more?
Harlan, I'll buy you a drink afterwards, but you gave me the thesis of the combination. That is exactly how we look at it. And it is like every system is different, of course, but if you think about the components of it, which is what, the 4 pillars that I summarized at a high level, where if you think about the pillar being 100% of that bill of material, which is power, sense, connected compute, and control, together we're able to do 100% of the 4 pillars in a non-overlapping manner. You mentioned the reference design. That is a good design to kind of anchor on for a lot of the customers that have that at the center. And I would flip it around where a lot of our designs that we do with customers have a compute platform that could be beneficial for the customer for it to be Synaptics. That is exactly why this combination with the complementary nature of our technology and our portfolio is such an exciting combination for the systems that we talk about, or intelligent systems.
Harlan, if I may add to what I'm saying, and I'll just give you a customer perspective. Given the interactions with some of the companies that have been in data centers, for example, a company in San Francisco, big in AI, wanting to get into the realm of physical AI, they clearly told me they would rather focus on data and not on systems. The engineering, time, expertise needed to build a system from where they would ultimately get to data and machine learning to build inference training and machine inference capabilities is a very long tenured cycle. And if somebody can come and provide the entire system solution and the tech stack that enables them to get jump started in this arena, first with data and ML capabilities that they would invest in engineering capabilities in, it is bingo for them. And so, long story short, increasingly the partnership with onsemi portfolio and Synaptics' portfolio brings that capability of system solution delivery at the customer, and effectively taking that complexity and engineering burden outside of that company or the customer. In the process, if you net it out, we create through system solutions, engineering economies of scale that scales across multiple customers in terms of delivering system solutions. And so that is the benefit of the combination that ultimately will see tremendous dividend. And obviously, I go back to, I said this earlier, the open developer platform and the tech stack accessibility to a broader engineering community in the customer base is very compelling in this context as well.
I appreciate that. Very insightful. Just a quick follow-up. Any dynamics or challenges in transferring the connectivity technology license between Synaptics and Broadcom to onsemi? The technology license is quite broad, right? Wi-Fi 8, UWB, Bluetooth, GPS, etc. Any challenges in transferring that technology license?
Obviously, we can't discuss those specifics, but we're focusing more on announcing the deal today, and obviously the announcement of the deal is what got us, all of us on both sides, comfortable with moving forward.
No, perfect. Thank you.
Thank you. One moment for our last question, please. It comes from the line of Vijay Rakesh with Mizuho. Please proceed.
Yeah. Hi, Hassan and Rahul. Congratulations on the deal. Just a couple of quick questions. As you get this IoT business from Synaptics, do you expect to keep that as a separate reporting segment after the post combination? And are you seeing any divestitures? Anything that you feel is not strategic in this? And a follow-up.
Yeah. So obviously, we intend on having Synaptics be a operating business unit within onsemi. And of course, any reporting will come when we post-close of the deal. And like I said, until then, we're two separate companies. And we are committed to the product lines that Synaptics has. I mentioned how each one of them is strategic and the reason why it is strategic from an end market. So that is a complete deal with all completed technology. So we're excited about every segment of technology that Synaptics has invested in that they post-close would bring into onsemi.
Got it. Thanks. And just a quick one. Any thoughts does it need a MOFCOM approval and any thoughts on, is there a breakup fee in this?
So obviously the details will be all filed, which is customary for a deal of this size for two public companies. And I mentioned before, this is normal regulatory approvals, which includes China in this case.
Got it. Thank you.
Thank you. And this will conclude our Q&A session. I will turn it back to Hassan El-Khoury, President and CEO of onsemi, for closing remarks.
All right. Thank you all for joining us on the call. We're very excited for the prospect of this combination and the compelling strategic and financial benefit to position the combined company at scale to win where the market is going while maintaining our focus and success where we are winning today. Together, we would become an industry leader positioned at the intersection of power, sense, connected compute, and control, addressing the four pillars of physical AI. I can say it's been a pleasure working with Rahul and his team during the process. We look forward to continuing this journey together with the extended Synaptics family. I look forward to welcoming them to onsemi, and together we will execute and deliver the value for our customers and shareholders. Thank you.
And with that, we will conclude our conference. Thank you for participating, and you may now disconnect.